Hello, everyone. Hopefully, you're having a great day today. My name is Anthony Weatherspoon Jr., and I am a licensed financial advisor. I'm on my way to the gym, but I just wanted to get this presentation out of the way here. And I love the stock market, it's a passion of mine. And I want to start with what is the stock market? So, the stock market is a place, mostly digital now, where people buy and sell shares of companies, and these shares represent ownership in a company. If you own a share of Apple, you own a tiny piece of Apple. Up next, what is a stock? So, a stock is a unit of ownership in a company. And when a company wants to raise money, it can sell shares to the public through a process called an initial public offering, otherwise known as an IPO. Once shares are sold, they can be traded on stock exchanges like the New York Stock Exchange, NYSE, or the NASDAQ. Next, we're going to get into why people buy stocks. Investors buy stocks to either earn dividends, a share of the company's profits, sell it at a higher price later for profits, or to have voting rights in a company decisions for some type of shares, or maybe all of these factors. At the end of the day, most people buy stocks because they want to grow their wealth or make money. Next, we're going to talk about what causes stock prices changes. So stock prices go up or down based on company performance, which is profits and growth, the economic conditions of the overall country or the nation or the world in general, and also investor sentiment. So how people feel about the market. And obviously, of course, supply and demand. More buyers equals a higher price, and more sellers usually equals a lower price. Next, what is a stock exchange? You may have heard the term the NASDAQ or the New York Stock Exchange or the London Stock Exchange. So, a stock exchange is like a marketplace where stocks are traded. And of course, those examples include the New York Stock Exchange, which I just mentioned, the NASDAQ, London Stock Exchange, but there's other exchanges throughout the whole entire world, but these are some of the most popular. And these exchanges, what they do, they provide liquidity, meaning you can easily buy or sell shares on those exchanges, which makes it a better overall experience for people looking to buy and sell. Here's some key concepts for beginners. Long-term investing versus trading. Long-term investing means buying and holding stocks for years. Trading involves frequently buying and selling, which is riskier. Next, diversification is very important. Don't put all your money into one stock. Spread your investments across different companies and sectors to reduce your risk. Next, we're going to talk about a little bit about market trends. So, you have what's called a bull market where prices are rising, and you have bear markets where prices are falling. You have a correction, which is a short-term drop of 10 to 20%, and of course, you always have a crash. Not always happen, but sometimes crashes do happen. It's inevitable in the stock market. But historically, the stock market has always bounced back from those crashes and made newer highs. Next, how to start investing. So, to start investing, you open up a brokerage account like a Fidelity, a Schwab, a Robinhood. Next, you decide your strategy. You want to be an active investor, trading, or passive investing. And also, you want to consider index funds or ETFs, which stands for exchange traded funds, for easy diversification. Where, for example, if you invest in the S&P 500, you don't have to worry about picking and choosing the investments. You actually have professionals who will pick the companies for you and allocate them appropriately. So it takes all that guesswork that people who like to pick stocks out. And for those of you with busy lives, I would highly recommend starting off with an ETF or an exchange traded fund such as the S&P 500 or the Invesco QQQ. Next, let's take a look at the history of the stock market. So, if you look at this chart here, which goes back to 1996, which we're coming up on about 30 years now, but over the course of the history of the entire stock market, the trend overall is the S&P 500 continually rises, or the stock market as a whole. It rises about 8% per year. Now there's peaks and valleys along the way. There are some corrections and crashes along the way, but historically the stock market tends to just overall increase and grow your wealth. That's why it's highly recommended. Once you have your money in the market, you don't want to pull it out, because if you miss even one of the best days in the market, you significantly reduce the amount of returns that you're going to get. And if you do it more often, which is you take your money out more often than some of the best days of the market, it's even more greatly reduced. So you want to keep your money invested in the market because you want to take advantage of when the best days take place. So thank you all for your time. Once again, my name is Anthony Weatherspoon Jr. If you want to have a consultation around the stock market on a one-on-one basis and really learn the ins and outs with dedicated time, my phone number is 734-218-7961. Once again, I'm a licensed financial advisor and also am a Humana Market Point representative, specializing as a Medicare advisor as well. So these are what I do for my living, and hopefully you all have a wonderful rest of your day. Feel free to let me know if you have any questions or concerns. I would love to be a resource for you. Hopefully you all have a wonderful rest of your weekend. Thank you. Goodbye.